All right, so again, thank you for joining us. This Webshort is going to be to qualify your self-employed borrowers using only 1 year tax return. Okay, so this is a Freddie Mac program, and I just want to make sure everyone can see the screen.
Yeah.
Okay. So the first thing here is with this program, it is a Freddie Mac program. When you get an accept, a streamlined accept, when you run LP, regardless of what the findings tell you, if you have a self-employed borrower, you can qualify them based off of the last year tax return. At this time of year, as people are filing taxes, this is normally a popular product. But so, as it states here, use your most recent, filed tax return to qualify with a Freddie Mac LP streamlined accept. Okay. 1099 borrowers would also qualify for this product. So, for instance, you have a anyone that gets 1099 that's not necessarily self-employed would qualify. So, the one that would come to mind right away would be a realtor. You really wouldn't think that they're a self-employed borrower right off the bat, but they are, because in this case, because they're 1099. Okay, now you should have a 2-year self-employment history product, but we can make an exception to the rule if the borrower is in the same line of work and the income is consistent. Okay, so for instance, we just had an example here where we had a doctor that is employed at his hospital, but in February of 2013, they changed the whole pay system where now all doctors are 1099 and not W-2'd. Okay, so now with that case, he filed his tax returns for last year already, and we are going to use his tax return, his 1099 income, to qualify him. It's still along the same line of what he's made when he was W-2. And the reason why we can make this, and the reason why we can make this exception, is because the income's consistent and he's in the same line of work. Nothing's really changed. The only thing that's changed really is the fact that he now is 1099. But he's working at the same place. He's the perfect example in a case like that. So, but if you have any of these scenarios that come up, please feel free, contact your AE so you can go over it with him or her, and they can advise appropriately. That's one here. Don't worry if you have to show 2 years tax returns. We're still going to qualify your self-employed borrower using 1. So what do I mean by that? If you have a husband and wife, the wife's self-employed, the husband's a teacher. So they're going to want to see 2 years tax returns and W-2s for the teacher, but they're still going to only qualify off of the 1 year. Same would go if you have a self-employed borrower who is also collecting rental income. They're going to want to see the 2-year rental history, so they're going to ask for the 2 years tax returns. But it doesn't matter what the what the 2-year tax returns show as far as income go for the self-employed borrower. The underwriter is going to qualify based off of the last year. So this is the time now to go through your denied loans from over the past year, as far as it went from for any self-employed borrowers who maybe didn't qualify. Anyone have any questions in regards to what I just went over here?
Can they be any type of self-employed?
Yes, any type of self-employed, just as long as they filed as a self-employed borrower. That there was, because a 1099, they would file a Schedule C. That qualifies
right.
for self-employed. Yeah.
Right, but if they're a S Corp. So.
Yep. 1 year.
Okay. So even if we have 2 years, and let's say 2012, the self-employed, the guy only shows he made $10,000. 2013, he shows he made $90,000. And you're going to see the 2 years. You're only going to use the $90,000.
Correct.
Okay.
Yeah. So that's the beauty of it.
Question?
Sure.
Yeah, I have one who are both retired, and they do have an S corporation that they get K1. Will that be okay for this program?
Yes.
Okay. Thank you.
You're welcome.
Do you have to have 20% equity to do this?
Yeah, so whatever the normal, I got to see what the percentage would be. I can get back to you on that. But whatever the normal, guideline would be, that's what we would follow. The only difference here, the caveat here that really helps us out is the fact that we don't have to average 2 years, if they went up. Does that answer your question?
Do you have to get the response, like the LP response, saying they only need 1 year, or if it says it needs 2 years, that you still are only going to use 1 year?
Yeah, so LP, you have to have they give you an accept and a streamline accept, right? So when you get the streamline accept, which is 90% of the time, that's regardless of what it asks for, because LP and DU are a little bit different. DU is going to be specific, right, where LP is more general as far as what it asks for, documentation-wise. So as long as you see the word streamline accept at the top and you have a self-employed borrower, at that point that you can use 1 year tax return to qualify.
Okay, but I mean, I can get a streamline accept on a 90% loan to value, but the problem is, are you going to be able to get mortgage insurance coverage on it?
Yes, because our mortgage insurance companies are going to follow the guidelines of Freddie Mac.
Wow. Okay.
All right. Anybody else?
Yeah. Can you print? Can we print out one of these things, or send us a copy of this?
Yeah, if you want to email me right after, I'll shoot you a copy. We're also going to put it on the website, and we're also recording the session as well, and we're going to put the recordings on the site as well, so you can just go back and listen to them if you like.
Good.
All right?
Very good.
And, some of the marketing ideas, just to touch upon quick, for this product is, the first one here we put realtors, for 2 reasons, Purchase business, that would be one, but also realtors are 1099, so if you can go in there and offer the realtor, a product like this, I think you might be able to get some business out of them, them buying a new home or possibly refinancing their current home, because you can, because I think all realtors are 1099, so they would fall under the product. You could do direct marketing, whether it's, however you do your direct marketing, but, just market to all self-employed borrowers. Hit up your CPAs, your attorneys with this product, especially right now. And I don't know, I always feel like if you join a self-employed, group or those events for self-employed borrowers, with this product, you should walk out of there a winner. And then also, in our age today with Facebook, Twitter, LinkedIn, and any other social site that you're on, don't be afraid to put this out there. It's really a great product.
That's what I want it for. Yeah.
Okay. And anybody else have any other questions about it?
Nope, we're good.
All right. Well, again, a recording of this will be on the website, MortgageBrokerSupport.com. It will be under the video. I'm going to put that up. And if you'd like a copy of this, please email me, and I'll shoot you a copy of it.
Jason?
Yes.
Jason, hi, it's Carol. On JR's question with the people with the S Corp, on your Social Security income, what are you going to allow them to gross up?
Social Security income will allow them to gross up the untaxed portion. So if all of it's untaxed, go ahead.
Because some investors only allow you to gross up whatever the borrower's tax rate is. So in other words, if their tax bracket is 15%, you can only gross it up 115. So are you going to 125 irregardless, or are you looking at the borrower's tax bracket?
Yeah, I haven't heard of that, here ever. So I would, my first, reaction to you would say, no, it's 125, and it would be 125% of whatever is not taxed, the untaxed portion. But that's a good question, and, let me raise it, and I'll get you a follow-up answer on that.
Because I know you're doing Freddie, not Fannie, and I've looked at it.
Correct.
Fannie guidelines, so it may
yeah, so
Freddie.
Right.
Okay. All right, thanks.
All right, no problem.
Thank
Before we sign off? No,
Yep.
no problem. You're welcome.
No problem. Jason, thank you very much.
what we would do. Hello, Jason, are you still there?